So my name is Kathleen Sly, and I work out of the Minnesota District Office of the Small Business Administration. And we're so happy to have our panelists here with us today talking about funding options. Before we get started as well, I want to note that SBA's participation is not an endorsement of any product or service, but we have been bringing in experts from our small business community, particularly in this uncertain time to present on timely topics to small businesses. So we're really excited to have our presenters here today. Here we have Tom Osborne. So Tom is with our SBA district office here in Minnesota, and Tom has worked over the past 10 years with the Small Business Administration as a lender relations specialist. And in the recent past, he worked with the Minnesota district office as our SCORE liaison and Veterans Business Development Officer. So prior to SBA, he worked as a lead underwriter for the Multifamily Housing Guarantee Program and the USDA Rural Development Minnesota State Office. Justin Erickson, here on our panel, is joining us from Essex Capital. And Justin is the founder and principal of Essex Capital, which is a Midwest-based economic development consultation and site selection firm. And far too often, companies are unaware of local and state incentives and financing programs open to them. So it's important to understand that these programs, what they are, what their financial benefit are to different small businesses, and how to qualify for them. So Justin will speak today with a focus on the process for companies and small businesses, how they should follow, and give a general overview of how these programs work and how they can impact small to mid-sized businesses looking to grow their business. And Patrick Donohue, he's with us as a CEO from Hill Capital Corporation. And Hill Capital invests $500,000 to $1 million directly in small businesses throughout the Great Northern region. And the fund has attracted hundreds of established small businesses and made 3 investments so far in 2020. But Patrick's expertise is in finance, and he has over 20 years of experience in capital markets, including investing, corporate development, financial modeling, investment research publication, and investment banking. So we are excited for our conversation today with Patrick, Justin, and Tom around finding and combining different funding sources for our small businesses. So I just before I hand it off to Tom, I just want to make a note that if you do have your video on today and you're a participant, we're going to ask that you keep your video off, just so that we can make sure that we have the panelists on video. And I also want to remind you to keep your device on mute. So we will try to mute you as we go through, just so we don't have any background noise. And I know we have a thunderstorm going on in most of Minnesota, so I want to keep that down. The structure today of the panel, welcome panelists. We're so happy to have you. We're going to allow the panelists to present a little bit on their background and content before we get into the Q&A. We'll have each of them, Tom and Justin, and then Patrick, go through some of their resources as well, sort of where they're coming from in terms of finding and combining funding sources. And we hope that the different angles that each of our panelists bring together today will support you in thinking about creative ways to support funding options for your small business. In the second half of our presentation, as I mentioned before, we will open it up for Q&A, and we would like to start off with questions directly from you all about finding funding options. So we will ask that you do put questions in the chat box of the Teams application. If you're able to see, there's a small word bubble icon. If you click on that, your chat will come up. And again, as we move through the presentation, please try to keep your video off if you're not a presenter today, just so that we make sure we have those panelists on the screen, and your phone or computer on mute. So without further ado, I will pass it off to Tom, and we'll get started.
Well, thank you. Good morning, everyone. I'm Tom Osborne with the Minnesota District Office. I'm a lender relations specialist. So basically, I work with the lenders. We have over 400 lenders here in Minnesota that actually participate in one way or another with our programs. So what I want to do is give you kind of a quick overview of our SBA funding programs. And so we're going to move on to the next slide here. There we go. No. Back one. There we go. Okay. The mission of the U.S. Small Business Administration is to support small businesses. And we've been doing that for over 65 years. So back when SBA was started out, the concept was that we change the lending by making it more secure for the lender. We actually guarantee a portion of the loan. So that changes the whole picture for lending. The SBA empowers entrepreneurs and small business owners with the support they need to start and grow. We also do recovery, and most of you probably are aware that we are involved in the COVID-19 recovery and helping businesses to survive that. And so we like to be able to help businesses in every stage of a business life cycle. Next, please. The benefit to the borrower, and I'm going to try to really quickly give you an idea here. So when SBA puts a guarantee on a loan, it makes the lender a lot more secure. We guarantee up to 80%, or I'm sorry, up to 85% of the loan. So that makes it easier for you to access funding for, capital for your business. And some of the unique benefits of that are that you get better terms. And like I said, it shifts the emphasis from collateral, in other words, something that you own, to a projected or real cash flow. So when SBA gets involved in guaranteeing a loan, we actually shift that emphasis from collateral to cash flow. That's one of the unique benefits. And so back in 1953, when this was started, the only people that could really get into business were very wealthy people. And this shifted that emphasis. So now if you have a good business plan and you can project a good income, forward for your business, you would probably be able to borrow money based on that projection. Again, the terms tend to be a lot longer because the lender is more secure because we back it up with a guarantee. We also offer the beginning of the process is that you want to make sure that you have those projections and that you have that you can convey a good understanding to your lender of what you're going to do in your business. And that involves a good business plan. And we have counseling and education through our partners, the small business development centers, and SCORE and women's business centers can help you to develop that kind of they can counsel you and help you develop that business plan and those projections. We'll go to the next slide. So the uses of proceeds can involve basically anything that, you know, is involved in your business. You can borrow for working capital, seasonal financing, even export loans, revolving credit, and refinancing. You will have access to up to 5.5 million in combination. We have our 504 program. When you combine that with our 7A program, which we're going to talk about here in a minute, you can go up to 5.5 million to fund your small business. And that, with the 504 program, that would be involving fixed assets of machinery, real estate, equipment, furniture, etc. So really, for any business purpose, we have a program to fit that. Next slide. Okay, this is kind of a quick rundown of our programs. And our main program is the 7A program, and it funds your startups and your expansions, facilities and equipment. Programs include our Cap Lines program and Express. And I'm not going to go into a lot of detail on this due to the time constraints that we have, but the 7A program is the big umbrella program. So if you're looking to start or expand your business, you would visit a lender who would participate in our 7A program. And they can participate in many different ways. They can be an express lender, which gives them authority to loan money under their own authorizations. And there's PLP, there's Cap Lines programs, and there's many different ways. So what you want to do is find a relationship with a lender in order to get hooked up with a 7A program. You want to get a relationship with your lender that does our SBA 7A program. We also have the 504 program, which is done by our CDCs. And if you refer to, this is all long-term fixed rate financing for fixed assets. This program is really popular right now because the rates are tremendous right now. So this is kind of like getting a mortgage on your property that you're going to be operating out of, or when you're buying large equipment. So that can all be incorporated into a 504, and that program, like I said, is really booming right now, and highly. It can be combined with the 7A for other purposes. We also have an export program, and a lot of people would think, oh, well, I'm not going to be exporting. And in a lot of cases, you would not be exporting directly, but in some cases, you would be an indirect exporter, such as if you were growing grain in your fields and selling to a big conglomerate, you would be considered an exporter. And our export programs have some big advantages even over the 7A program. It's an enhanced 7A loan. We also have Community Advantage, and this is a pilot program up to $250,000 for underserved markets, more targeted markets for this, and it's a limited to 250,000. We also have our microloan program, which is useful for a lot of small businesses, especially if you're going to borrow less than $50,000. Microloans are administered by nonprofit intermediary lenders. So the SBA actually gives the money to the intermediary, and they loan it out to support their nonprofit. And it's for 50,000 or less. And the terms, you'll have to check into the terms on that, but the credit evaluations on those are maybe a little more lenient. So because you're borrowing smaller amounts of money, it's more flexible. So the microloan program could be a good option for you too. Okay, the next one. The last thing I want to mention is that to get hooked up with any of these programs, we have a program called Lender Match, and we just reinstituted that. So you can go on SBA.gov and you can find Lender Match and sign up to find a lending partner. I would advise you that if you have a bank that participates in SBA loans, that you approach them first. That would be your best bet. So you already have a relationship with a bank. So again, this is your debt lending, and debt lending is applicable for a lot of businesses. And sometimes you want to combine it with what the other gentlemen are going to be talking about today, which is equity lending. So, but when it comes to debt lending, I believe that SBA loans are probably what you want to shoot for. So I think that just about covers it. I would also advise you to look at our resource guide, and you can find all the lenders that participate in this program, and you can find all our partners contained in that particular resource guide. So I'm going to pass it back to Katie.
Perfect. Thank you so much, Tom.
Thank you.
And just a note on the resource guide, I did include a link in the email, the reminder email before this. There is a link to our 2020 guide. So thank you so much. So next up, we have Justin Erickson from Essex Capital LLC. And Justin, I'll leave it to you to take it from here.
Yeah, you can just go ahead and click to the next slide now, Katie, make it simple. So good morning. I appreciate everybody taking the time to be on here. My slides you'll see compared to Tom and Patrick's are much more simple, in part because I look at this less as trying to go into any great detail in terms of what are economic development related financial incentive and financing programs or any sort of education, and more just simply awareness that these things are out there. And so by way of background, I've had my business for 15 years now, and I help a lot of companies throughout the Midwest, but other parts of the country as well, who are going through expansion, going through growth. And as they do that and expand into new markets, they qualify for all sorts of local to state and sometimes federal financial incentive programs. Now, that's not to suggest that anybody on the webinar here this morning has to think, well, geez, I have to up and move my business. That is not the case. The way that I look at this is, simply put, if I am starting a new business, or you have a business right now and you're saying, hey, I want to grow this thing, typically there's a few primary ways that you can finance that growth. Of course, you can go to a lender, and in conjunction with the stuff that Tom just talked about, the SBA, you can get traditional debt. As Patrick will touch on, different forms of equity. You can go and give up a portion of ownership in your business and get some investment capital to grow. You can put your own money into it, or you can sell your products and services. And I know that that's pretty basic and simple, but a fifth component that a lot of businesses I don't think of, because frankly they aren't aware of it, is, well, what about other government-backed financing and incentive programs, things like grants or forgivable, or what I call performance-based debt. Different low interest and sometimes unsecured loan programs as businesses get a little bit bigger and more established, different tax credit and tax abatement programs. Those programs are out there, and yet I encounter a lot of businesses oftentimes say, well, why isn't somebody making me aware of them? Why isn't my accountant bringing it up? Why isn't somebody from municipal government. Hey, I know some city council members. I know the local economic development director. Why aren't they bringing this up to me? And it's not because they're bad people or they're trying to hold back opportunities, but I put it analogous to if you go out and fill out your federal tax form and send it to the IRS. They don't call you 6 weeks later and say, hey, John, you know what, we looked at your return here and we thought you were a little bit light on deductions, so we're going to go ahead and rework this and send you back a refund. Not a perfect analogy, I understand, but with most of these programs, they're available, but you have to know to go to ask for them. And so just kind of the who, what, where, when, why type situation. What are we talking about? Municipal, state, and federal incentive and financial programs. Who, for small and mid-sized businesses, and this is something I run into at a lot of companies oftentimes that say, we aren't 3M, or I saw the Business Journal and I saw that fill in the blank Fortune 500 company is expanding operations and they qualified for all sorts of incentives, or many of you have probably heard of DEED or Department of Employment and Economic Development and maybe some of the programs that they have. And gosh, you know what? We're a small business with 5 employees and our long-term goal is and a dream would be to grow to 15 or 20 employees. Certainly that stuff doesn't qualify for us. And it's just the opposite in many cases, where these programs certainly can be taken advantage of and utilized by large companies, publicly traded or otherwise. But oftentimes they're geared just as much, if not more so, to small businesses. And so why should you be interested in this? Why do you care? They're available capital sources, again, not as a competitive alternative to what Tom was talking about, the SBA, or what Patrick will touch on for equity options in general, or specifically held capital. Oftentimes these are a complement, the benefit being that it's oftentimes a cheaper form of capital, whether it's a debt instrument that has more flexible terms and conditions, deferment of P&I payments, principal and interest payments for a period of time, lower interest rates, sometimes either a pure grant or forgivable portion to that. It can be very attractive, and of course, it's not going to come with the dilution of taking equity investment. In terms of the where, again, through local and state economic development authorities and agencies, you can take any municipality and just Google economic development city of blank, and it's going to pull up an organization. And then how, again, is through researching available programs, or simply just reach out to me. I'm always happy to have a conversation with somebody, not because I am angling for some role. I do not bill myself as some sort of professional grant writer or somebody that necessarily wants to be hands-on with all of this, but I view it as candidly and selfishly a little bit of effort that I can put in to help somebody out, that maybe it's a 15-20 minute conversation to make them aware of a potential program. Or oftentimes companies come to me and say, hey, I think I'd qualify for this program. I did a little bit of research, somebody told me about it, but I'm a little uncertain. I've never filled out one of these applications before. Would you mind reviewing it for me? See if it looks like it's something I could submit. Should I be concerned about anything I'm committing myself to? This is the world that I live in every day. I realize it's a very unique niche, so I'm always happy to help people out because candidly, it's the best form of marketing for me. So I'll have you, Katie, click to the next slide. And again, types of incentives, and we want to keep this to 7 minutes. I was told I'm creeping up on 6. So real brief, just to give you a sense of scope, because a lot of times people say, well, geez, not doom and gloom, I'm dealing with the government here, but boy, is this more hassle than it's worth. And what you can see here is a pretty wide range in terms of potential incentive benefit. And I could break down each of these bullet points into probably 75 more bullet points of different specific programs, but to give you a sense of scope, if you will, loans can be as small as 10,000 and go up to 2 million. Forgivable, or again, what I call performance-based debt, usually doesn't get as large as some of the more traditional lending instruments, but again, 10,000 to 1 million in some cases. Tax credits and abatements, whether that's on income tax, corporate income tax, if that's on property tax, payroll tax, that's a percentage that's going to go, obviously start above 1%, but go in some cases all the way up to 100%. And then different grants. Grants tend to be the most attractive form of capital, obviously, and hence they don't tend to be as large, but we are talking about meaningful amounts of money here. And is it a process? Yes, everything is a process. Working with an equity group, working with a lender, SBA backed or otherwise, there is a process, and there is one here too. which is a little bit unique to maybe what you're have experienced in the past. But again, I hope, and my contact information here is on the screen, and I think has been shared prior to the webinar here. I hope folks won't hesitate to shoot me a call or an email. I'm always happy to have a conversation. Just under the auspices of I hate to see people that miss out on an opportunity, can't grow their business because they aren't aware of these programs, or get frustrated because they don't understand how they work. I'm always happy to help, and anytime people have questions, please reach out.
I think that's really great to think about, and definitely having, they're not so much hidden incentives, but incentives that are, once you're aware of them, they're much, they can be very valuable to access. So next up, we do have Patrick Donohue. So welcome, Patrick.
Good morning. Thank you, everybody. I appreciate the opportunity to be here. We can click on to the next slide. I just want to reiterate, I'm going to touch upon several things that that Tom and Justin had mentioned. First and foremost, as Justin said at the end, I'm here to help. My motivation is simply to help business owners understand where sources of capital are. This is one of the best put together panels I've participated on. I've been doing this for a long time, and today you really have that full spectrum. And I would encourage you to think about capital along the lines of SBA first. So in order of the panelists today, you definitely want to start with your community financial institutions in the SBA. And I'm going to touch upon this in a couple more slides, but you want to have those relationships first, and then work with people like Justin, local economic developers, have those relationships throughout the community to understand where other pockets of money and incentives are. And then, as Justin mentioned, the world I play in is the world of equity. So at the end of the day, it's more sharing long-term upside or a portion of the economic interests of the business long-term to be able to bring in capital. And so a lot of business owners are have a challenging time thinking about costs of capital. Let me just summarize it this way. Your most cost-effective capital is going to start with your community financial institutions and anything that the SBA can do for the reasons Tom mentioned. And then as you go across the spectrum, why don't we just click into the next slide here, because we can make that bigger. As you go across the spectrum, that money is going to get more and more expensive. When you think about like a bank, they put in $1, and depending on the interest rate, they're going to want their dollar back plus 7 to 15 cents over a period of time. When you're dealing with venture capitalists or equity investors, they put in $1, they want to earn $10, if not $100 back someday. That's why they're chasing the next Facebook and the next Google and so forth. How we think about the world is maximizing the community financial institutions, the resources of the SBA. And the slide we just pulled up is something that has been a cornerstone for Hill Capital to really help business owners understand the financial landscape. Once you get beyond community financial institutions, you are into an area of specialty finance. This is also an area that Justin has quite a bit of insights to. So you might get into alternative lenders, other sources of capital. This world has become much larger over the last several years because now there's many online lenders. So many of them are good players, but some of them are more analogous to like payday loans. So you do have to be careful there. But that's where I will reiterate many times, that's why the community is so important, to have relationships with your community financial institution and with others. So as you navigate these waters, you can make sure that you bring in the best financial partners into your business. And I reiterate that word partners. As you go across the spectrum, so if you think about like high risk, high reward, you move over into what a lot of people like to call angel investors. I don't prefer that word because I think it's misleading. At the end of the day, these are individual investors. And so the way business owners find individual investors, and the way I've seen this work from experience from the past 20 years, is people are literally putting together a list, ideally 100 contacts. How do you get that? You can't really buy it. You're going to utilize your relationships. So ask me, Justin, and your bankers, accountants. Ask them for connections of anybody who might be an individual investor or may be interested in buying equity in a business. Unfortunately, the reality is for privately held small businesses, there's not a lot of what I would call institutional capital, meaning people like me who wake up every morning trying to think about how to invest in a private business. Unfortunately, there's not enough of me out there. We need more investors like this. And so the vast majority of investors that are in this space are other business owners. They are people who have sold their business, but they're not necessarily professional investors, but they would invest in private businesses should they have the right opportunity. And so that's where the opportunity lies, in leveraging existing relationships to build new relationships, to go out there and to have conversations with people to learn about if they'd be willing to invest in your business. There are some angel groups out there like Gopher Angels in the Twin Cities, West Central Angels out of Wilmer, Minnesota, Apex Angels out of Duluth. I could flood you with insights there. So if you need any of those contacts or insights there, just ping me afterwards, and I'm happy to have insights. And then, well, let's go to the next slide, because this will kind of just really tie together a lot of the pieces. When I do panels like this, I love the diversity, because typically we have literally thinking about trying to start a business, and we who have businesses that are doing 50 million in revenue and are trying to take it to the next level. Because one of the interesting things is, even if somebody's doing it, and I've seen it firsthand, $50 million in revenue, it doesn't mean that they can easily access capital themselves. Of course, the smaller business gets, the more challenging it is. So resources throughout the community are really important to help connect the dots. Above the line at the top of the slide, these are entities, organizations that are pretty much dedicated 24/7 to helping entrepreneurs. That's why I put them up there, and they also are probably kind of the touch upon the broadest range of businesses. 1 Million Cups is a weekly event. It's every Wednesday at 9 a.m. It's free, open to the public. I am a lead organizer for the one in Eden Prairie, Minnesota, but there's also groups in Wilmer, Rochester, Winona, and elsewhere. So just look that up. I would point out the resources of the SBA. It just doesn't get much better than the Small Business Administration. They don't necessarily put on programming themselves as the SBA. They partner with a lot of people, and so they support things like SCORE and the America's Small Business Development Center programs. And also they have programs like Boots to Business. And so the SBA is a very integral part of the support ecosystem of small businesses and entrepreneurship. So again, please tap into all the resources that they provide. You have a lot of accelerators, and one of them that really stands out is in our region is Generator out of Madison. They already have 5 accelerator programs based in Minnesota alone. There's a lot of programs there, so we don't have time to jump into all of them, but I would definitely have Generator on your radar screen, and many of their events are free to go to network. Chambers are wonderful, but your local chamber, but I would highlight the resources of the Minnesota Chamber. They've gone above and beyond during this time of chaos. And then there's entities, well, like the Minnesota Chamber and Entrepreneurs Organization, EO Minnesota. I'm a member of that, but some of these things you'll have to pay to be a member or part of the programming and stuff like that. Whereas on the far left, like 1 Million Cups is free, SCORE, the SBDC program are largely free. There might be some events they charge a couple bucks for. And then all the logos down below, these are either more centric to geographic areas or to certain industries or to specific events. And a number of these logos also represent what Justin Erickson talked about, is economic development groups. Because the economic development groups are really good at putting programming. Like I'm looking at the logo launch pad on kind of on the middle right-hand side. That's in Bemidji, Minnesota. they host a program like 1 Million Cups, and they do a lot in the Bemidji and the greater area to support entrepreneurship. And so look and tap into those resources, and even think about some of the other associations like Medical Alley, if you're a medical device company. If you are into being part of your community and civic, I put in the Rotary logo. You could join Optimist Club, but all of these things are fair game to go out there and build relationships. And so just to wrap, just the last slide here, I'll move to, again, I'm here to help. I did recently write a book. I've done a number of programs for the kind of the ensuing chaos with the pandemic. And so we did some research and put out a book about how entrepreneurs are kind of getting through this and surviving and thriving. So we do sell it for a few bucks to raise money for entrepreneurial events, but this audience is primed to have this book. So I did a code on their SBA to have that free. So if anybody wants to grab that, we'll also put the link in the chat if we can, and make that available to you. So that is it. Again, it's things like this and making those connections that are going to help you really find is the key word, and then combined investors, because investors like Hill Capital, we do want to work with others. The vast majority of our investments already have an SBA loan. They have incentives or money that they've tapped into elsewhere. So we highly encourage combining sources of capital wherever you can. Thank you.
Thank you so much, Patrick. And I like the message of ecosystem. So especially if you're thinking about sort of the private sector, the public sector, what is that sort of ecosystem of resources available to you? So thank you so much. So at this time, we will move on to our Q&A session. So this is the time that we're opening it up for questions. Please place them in the chat box. If you do have questions for a single panelist or a question that you'd like to address to everyone on the panel. We will get started with one question that did come up as more people place their questions in the chat box. So the question was about, given the sort of uncertainty of COVID-19, are these programs and opportunities in terms of investment, for example, are investors still investing in this time? Are there programs that are still ongoing with SBA that are not only COVID-19 related? Is there still money for that? In terms of the municipal resources, Justin, are there still new incentives for additional resources for businesses? So maybe let's start with Justin, if you would like to, and maybe talk about what's going on even despite COVID-19, or what are your thoughts on that?
Yeah, it was a good question. I saw it before that Christina had listed it, and I get that question frequently of late. People say, well, geez, whether it is emergency loans and grants from DEED or Department of Employment and Economic Development at the state level, or things that we've seen from local municipal chamber, economic development offices, grants, or utility assistance, whatever it is, certainly understand we want to help those existing, or they want to help those existing businesses who are struggling because of the COVID shutdowns. But gosh, does that mean that the other programs that maybe I was aware of, maybe I wasn't, but are they still out there? And the answer is largely yes. And I say largely because in most cases, they have not robbed Peter to pay Paul, if you will. And so whether it is annual budgets that have been approved at a state level down to a local level, usually once funds are earmarked for a specific incentive or financing program, those funds are usually dedicated to that, and very rarely do they take and divert those funds for other purposes. And I have not seen a lot of that to date. What I have seen so far in response to the COVID stuff is either a legislative edict or local council edict to allocate additional funds for these new programs to help the existing businesses. So for the most part, the existing programs have not been touched. Now, I say largely because for most municipal and state governments, July 1st kicked in a new fiscal year. And so budgeting was done for these programs. How much money are we going to earmark for fiscal year 2020-21 now that we're just entering into? And most of those programs had been allocated prior to the COVID stuff coming into place. What I think is going to happen as we get closer to the end of the year, and certainly into next year, is there may be a paring back of some of those programs. Okay, we have local municipal deficits, we have state deficits. We might pull those back on a prorated basis, not necessarily divert funds. They might just throttle some of that back, and it might be a little bit harder to access funding. But for the time being, most of those programs have gone untouched.
Yeah, and I would just say people have asked about, are investors still investing? And in large part, yes. So a fund like Hill Capital, we have $10 million, and that money is committed, and we need to put it to work. And so many like institutional investors are still investing. And I would also point out that there's now a record amount of cash in money markets. And so there's a lot of money on the sidelines. And so I would encourage people to still go out there and talk to people about investing in their businesses, because a lot of that money is still there. And if you look at the world of private equity and the statistics, there's still a records amount of cash that is available to invest in businesses. Now, of course, if a business has been harmed by the pandemic and so forth, that's going to make it a little more challenging, but would still encourage people to get out there and to have the conversation, and do not let the pandemic or others' opinions about their investors have stopped distract you at all. Go out there, fund your business, and be the lifeblood of the economy, because we need you as small business owners to go out there and make this happen.
I'd like to make some comments about the SBA programs. Our entrepreneurial programs are still open, and as a matter of fact, if you do an SBA guaranteed loan with one of our lender partners right now, you will receive 6 months payments towards that loan. So it's actually kind of a good time for getting an SBA loan, because you're going to get the first 6 months payments are going to be paid by SBA. There's also a little bit of incentive there because our Express program has expanded to up to $1 million. So that makes it easier for the lenders to actually, give you a loan. I will say that because of the challenge of the COVID-19, that you will have to have better preparation for your loan. You're going to have to strengthen some areas that show your cash flow because of the pandemic. So there are some challenges there, but generally speaking, our programs are up and running, and you can get all the assistance you need from our partners, and it's actually not a terrible time to start your business or to expand it.
Thanks, Tom, and to all of the panelists who responded. So we have another question. What are some good resources to explore the cost of capital and how to find the right mix? So we have all these ecosystem options, but how do we actually, is there any way to actually, how do you actually start implementing that and weaving them together? How do you recommend to approach that? Are there tools out there that businesses can use to sort of balance those different areas?
Yeah, I'd love to touch upon this. I just did a presentation to the Women's Business Alliance, and we dove deep into like cost of capital. And so happy that was recorded as well, and it's up on their website, so I can share that with people. But the cost of capital is very important. If you want to get wonky on it, I would highly recommend the Pepperdine Capital Markets research report. So if you want to see exact going rates for different sources of capital, they do an annual survey, and I've participated in it for now probably 15 years. And so I know that's a body of work that we look at and study quite a bit. If you want kind of just a rough framework, what I've presented on the past and what I've shared is, if you're looking at debt, you have to be very careful about like different fees and so forth, because the interest rate is usually pretty easy to understand. But roughly you're going to put in $1, they're going to put in $1, and they're going to need $1 15 back over time, depending on the terms and the interest rate. If you're getting into alternative lenders, they put in $1, they're going to want upwards of $2 back, maybe $3. If you are looking at selling equity, you have to be prepared to think about if they put in $1, going to take true equity risk, that costs the capital. They're going to want maybe $10 back when the business is sold. So they're going to need a decent percentage of the business. And so that's kind of the big picture, how to think about it and how to think about like cost of capital. But I love the question because not nearly enough business owners really think about that and really explore the costs and so forth. And I'm sick of seeing people being taken advantage of, especially by some of these some of the more shady sources of capital that have now popped up with the internet.
So we also have a question about sort of what if I'm a sort of pre-revenue startup in that sort of jumping from ground zero to the next level. Where do these funding sources fit in, or if I'm not quite, or what level do I need to be at in order to access these different sources, and how do I get there? To get between those two?
Well, first off, I would just share that it's never too early to start having conversations. Back in the day, 20 years ago, I'd recommend people kind of have everything in order before talking to people. But today it's the opposite. It's kind of that lean and agile mentality. Go out there and have conversations sooner rather than later. Utilize things like 1 million cups to present your idea and start getting feedback. That's so important. Different accelerator programs like Generator G Beta to get that feedback, but have conversations because there are situations where an early stage entrepreneur, if they've got a solid idea and they've are somebody that investors can trust, they can get investment in quite a bit of it pre-revenue. Now that's usually kind of the exception, not the rule, but that is out there. So do not limit yourself to thinking that you need to be at a certain level before you're having conversations. It's more important, I think, than ever to get out there and to start having conversations. And then also, I would also encourage you to do that with the banks. We work with a lot of more entrepreneurial banks, and that's the same thing. I mean, even if you open up a checking account and just put in $100, if you can build a relationship with the banker, because even if you get a little bit of revenue, and Tom can touch upon this, but there are things that are out there like these express loans and some of these things that can be made available for companies even at the early stages, and I would tap into that.
Yes, that's true, Patrick. Especially with our Express program, they can get capital, they can get a revolving account for up to $25,000 without any collateral at all. And that can be revolving for up to 5 years. There's a lot of possibilities, especially now that they've expanded the, up to $1 million on the Express program. So, and the other thing is that if you happen to be a veteran, you can get that loan for zero upfront fee, which will save you about can save you from 2 to 3% on access to that funding. So as you mentioned, Patrick, there's some good alternatives, and you have to kind of decide what kind of business you're going to have if you're going to be okay with selling some of your equity. There's situations where that is a real is a good way to go. The debt way, of course, the SBA loan is usually the best way to go. But there's a lot of possibilities out there, and there's combinations of that too. The SBA loans can be combined with other loans, and so yeah, there's a lot of different ways to go. And like you mentioned, some of these groups that you work with can help them make decisions on that.
Thanks, Tom. And Justin, I know we have a lot of small businesses as well who ask about grants. Do you find that municipalities offer grant programs for startups, or do you feel like it's a combination? What do you feel is like the landscape of the programs?
Yeah, a couple of thoughts there to kind of what Patrick said before. It's never too early to start the conversation. Now, one can say, great, sort of like networking for the sake of doing so. I can run around and have coffee, or now virtual coffee meetings with countless people. Am I really creating any impact or benefit to my business here? At the same time, I won't go to the details, but I'm finishing a project now that I met the company 3 years ago, and we determined very quickly in the discussion that it was not going to be a fit for them to qualify for any governmental programs at the time, for the reasons that I won't go into. But what was telling to me is, when we ended the conversation, was, but now I'm aware, now I know. And the question she left me with was, when do I call you? When should I call you? When should I be prepared for this? And again, fast forward, and we've got about an $800,000 package put together that involves no traditional lending, no equity. It's just a government-related financing program. So, a lot of times what I end up doing is talking to people, and it may be 6 to 12 months later. Now, if you have a very near term, I've got 30, 45, 60-day window, I need capital for XYZ, or else I'm in a pickle. Maybe planning for 2 years out isn't going to do you a bit of good. I want to be cognizant of that. At the same time, I find far too many companies that come to me and it's too late. They didn't know about this. Gosh, had I known 6 weeks, 6 months, 6 years ago, I could have been prepared to take advantage of this. So that's one thought. Second, as it relates to a lot of people say, well, I'm a startup. I'm pre-revenue. I don't have 3/4 of positive EBITDA, whatever metrics you're looking off of. Surely I wouldn't qualify for some of these government programs. And just the opposite can be true, because a lot of them are saying, we want to encourage more entrepreneurial activity. Patrick had showed a couple of, on one of his slides, a couple of logos of groups that I work with outside the metro. But a lot are saying, you know what, nothing against the Fortune 500 or the big companies, but we also want to, from an economic development standpoint, how do we further new businesses, not just existing businesses that are growing? How do we get new businesses going, and what can we do? And no, maybe we can't come and give them a $500,000 unsecured loan, but $25,000 here, $50,000 there. Sometimes even less can be significant. So I just tell folks, just because you're a startup, pre-revenue, pre-profitability, doesn't exclude you from qualifying for some of those programs.
So I want to ask one last question before we wrap up. So in terms of businesses accessing these different funding sources, what are the key sort of elements that they should be keeping in mind? Is the business plan the main key point, projections, credit score? What is the sort of package that businesses should be thinking about in terms of preparing themselves to access these resources?
I'd go, so a really simple framework for people to understand what moves money. There's two things that move money in this world: trust and emotion. And that trust factor can be unpacked. So if you have things that are available to help build that trust faster, that's really important. So you could talk about, like, if you've got a credit score and so on and so forth, but if your credit score is not great, if you've got, details and insights on what happened and why it won't happen again and so forth, but if you can build that trust, that's really huge. Now, financial institutions, or like the banks, aren't going to get so much hooked up on the emotion piece, although I've seen it a number of times. I think in Justin's world, they probably would a little more with like economic development, if there's an opportunity to build a new facility and new jobs and so forth. But the emotion piece gets really important when you're dealing with equity investors. There's got to be that emotional hook that people want to see, that can, I liken it to, like, if a medical device company, somebody that makes something related to medical devices, usually they can raise a lot of money because they've got that emotional hook. somebody has had a family member has died of heart disease or cancer, so they like get it. Like, yes, we really need to get this product to market. Here's $1 million so I could, invest and help make it happen. So I would just put out their trust and emotion for my answer.
Thank you.
I can go ahead and go next. A little bit different. Sorry, Tom, I'll be brief. With the government programs, what I see a lot of times is less interest in the upside, if you will. And as Patrick touched on before, if you're going to go to a traditional VC or even angel investor, individual investor, they're going to want to say, for every dollar I put in, what is my potential multiple of return, not just percentage, but multiple of return. A lot of the government programs, they're more interested in protecting the downside. Show me that you hopefully have a solid base from which to build from so that you're not going to go backwards. Beyond that, what they're most interested in is, what does this do to benefit the community you're in? Now, community can be at a specific municipal level, it can be at a regional level or a state level, but what is going to be the benefit? And from their eyes, or the lens that they look through, are things like, is this a company that is in a new cutting edge industry that is going to create that reputation for our community or our state? Is this simply an industry that's existing but is not represented in any way in our community or state at this point? Is this something that's helping diversify our economic base? What does it mean from an investment standpoint? As Tom had touched on some of the SBA programs with equipment and whatnot, they like to see that investment. Why? Because that equipment usually correlates to job creation, correlates to facility space need, and with that becomes property tax, becomes payroll tax. So what are we going to do from an investment standpoint into the community? And then lastly, jobs. They're going to want to look at jobs, and it doesn't mean that you have to create dozens or hundreds of jobs. Even a handful of new job creation is something that's extremely motivating, and oftentimes is how some of these various programs are and applications are scored, if you will. So anybody that ever want to have a conversation, that's fine, because it's going to be a little bit different than sometimes what you're going to anticipate with a lender or an investor in terms of some of the motivations for economic development programs.
Thanks, Justin. Tom, do you have any comments?
Yeah, I have some comments as related to SBA loans. Of course, all those things are important, the 5 C's and all that with the lenders. And that's why I try to stress that you should get a good relationship with your lender, that the loan officer or lender that you're going to work with, they have to thoroughly understand what kind of situation you're in so they can make good judgments about what program to put you in, as far as SBA, and what your projected, your projected cash flow will be, because that's really important to our program. So that, that part of it, and working with our other partners to put together that presentation for your banker or for your lender is really important too. So getting a mentor assigned to you from SCORE is a really good way to get started. And then they have connections. They are business people, and they will hook you up with other connections that can help you. They can also guide you through the whole process. And the same with the small business development centers. That's a good place to start also. If they take you on as a client, they will. And the really great thing about it is these partners that we work with, they do it for free. We support their organizations so that they can do this for free for you. So you really need to take advantage of that counseling. And, as far as going to get your loan, that is after you get that counseling and put your package together so that you can really truly convey what's going on, as far as your startup or your expansion or any business situation that you're borrowing for. So that is a really important step. Of course, your credit is important. Having good credit is an important key. That's one of the C's of the 5 C's, and your banker can help you to improve that too. So there's so many resources out there through our our network, that you really need to take advantage of that. And I hope people do.
Thank you so much, John. And that's a great segue in terms of talking about the resource partners. So I have them here on this last slide. And I did email out this PDF ahead of time. I know that as we move through the questions, we weren't able to answer every question. And I have provided in the PDF the email addresses so that you can reach out to Patrick or Justin or Tom, or generally here at the SBA if you have any further questions. As Tom said, as you sort of think about finding and combining these resources, accessing SBA's resource partners through the Small Business Development Centers or SCORE through the Business Mentor Program can really help you sit down and say, okay, here is the resources and sort of ecosystem that you have. How do we actually fit these together? So that one-on-one consultation is really great. And again, it's no cost to you. So pulling all these areas together, whether it's from the private sector, sort of government programs, and whatever you may be bringing to the table from your side as well, is really great. So as we wrap up, we have reached 10 o'clock, so I just want to say thank you so much. Patrick, Justin, Tom, thank you so much for bringing your expertise to the table today. We really appreciate that, and I'm sure the small businesses on this forum do as well. Just a note, we have recorded this session today, so we will be getting that posted, and we can send out the link in case you all would like to rewatch it or share it with other colleagues in your community. Again, for those specific questions, feel free to reach out to those individual panelists that have spoken today. I know that there are some specific SBA questions and some around investing and accessing those economic development resources. So again, we want to thank you so much. And one more note, newsletters are a great way to keep informed about what's going on. So different entities, the entities that Patrick shared, all send out newsletters on different events, and many of those are no cost to you. SBA, you can sign up for our newsletter here on this last page with your zip code. You'll get your local newsletter, Minnesota or whatever state you're calling in from. And again, those economic development entities, thinking about from your geographic location, city, county, state, federal, getting those newsletters can help you stay connected without spending a lot of time surfing the net as well once you get plugged in. So thanks again, and I hope that you have further awareness about these different funding options and how to think about creatively combining them. So thank you so much, and panelists, we really appreciate your time, and please stay connected as we move forward. Thank you so much.
Thank you.
Thanks, everybody. It was a pleasure.
Take care.
Meeting, it was really helpful for me, and I will try to contact Mr. Justin. You have a blessed day.